Hey, good morning, YouTube. So coming back with another update. People saw the market rally 2,000 points on, I think it was on Monday or Tuesday, and then another 500 and change. Actually, we're up, I think 1,100 at some point, or close to 1,000, and then the market sold off. So looking at the numbers, as we can see, Italy rapidly approaching. China's confirmed, put those in quotes. China confirmed cases. And of course, as you can see, the number of cases in China are slowing according to their estimates. But of course, in Italy, that is quite the we're seeing quite the opposite. Italy going through very similar measures of locking down literally the entire country, halted their economy. Only essential services for food, electricity, water, and of course medical care are allowed. But people, unfortunately, are still moving about a little bit more than they should be. And of course, well, I should say in America they are. In Italy, they've kind of locked everybody down, and if they catch you moving outside for anything but seeking medical care, food, or maybe checking in on a loved one, they're going to fine you. And yet they're still seeing these kind of increases, more than double the amount of deaths overnight. Another 683 patients have died, showing a 10% death rate, which is crazy. We're seeing rally in the market. We're seeing rallies in the market, but of course, we always have to keep in mind that these are not necessarily just investors who are buying. The federal government has also said that they will step in with untold amounts of buying by the federal government. So they're buying mortgages, they're buying bonds, they're buying, and then of course they've agreed to start buying securities. So we see a little bit of a bounce here. Like I said, what we were looking for was a potential bounce at 18K. Right, so I had been saying for a very long time that we were going to hit 18K. Hopefully, you've been listening. And so we did. We hit just shy. We were at 18,495, I believe, on the low end, at 18,495. And we're not even yet getting started with the number of cases that we have here in the U.S. Within the past 24 hours, we have found an additional 14,000 cases, and the deaths are just getting started. So we're already at 70,000. We're rapidly, we will more than likely surpass Italy because of the poor preparation here in the United States, along with medical workers getting sick. If you've been watching the news, they've stated that there have been numerous medical workers, police officers. Just here in New York alone, just here in the city, 200 police officers have been infected, along with numerous healthcare workers. And you can find evidence of that all over YouTube. People are posting nonstop about people getting sick. You can find people talking about it on Twitter. But here, just in referring to the market is very delayed. And like I said, just because we experience a bounce, and like I said, I expected the market to retrace back to our previous support. And so we were looking at 24K, 24K and 22K. So we bounced. 20K was there really wasn't a lot of support here. The market didn't halt at 24K, at 20K for a long period of time. But we did see a very strong bounce here during the beginning, the end of 19 into 2020. Excuse me, I should say the end of 18 into the beginning of 19, where the market came all the way, retraced all the way back down, and then subsequently it came back up. So we see it's a double touch. So over a longer period of time, so it has a little bit more weight, and that's what we're seeing. If you're looking at the 5-minute chart, you can see the hard pullback right here, multiple times where we pulled back, come up of 20K, and the market gapped hard down. Try to re-rally, subsequently re-rally to 22K with a sell-off, re-rally with a sell-off, re-rally with a sell-off, right? And so then the government said, well, now we're going to come in and start buying. But we're seeing that the market did pull back at the end of the day, and then of course futures are also indicating that the market is going to gap down. So this is what we're looking for, right? So we're looking for, futures are showing down 300, which is okay. not the end of the world. But again, like I said, we're just getting started. So, and we're not even talking about the unemployment numbers that have yet to come out, the amount of deaths that America will experience as a result of the coronavirus, and this will cause selling. If there's any sort of civil unrest within the country because of the poor leadership that's been going on within the federal government, it will cause the market to sell off. And if the numbers keep on looking like this, we're getting this many, discovering this many cases overnight, especially because within many parts of the country, people are not obeying the order to stay at home. Some places, like even in Florida, where the governor said that they're not going to impose a shelter-in-place mandate, etc., and people are just walking around, they're going to beaches, they're gathering, and this allows the virus to continue to spread, which is why we will easily surpass Italy probably by today or tomorrow. And so the number, I'm sure the number of cases will easily hit 100K probably by the weekend, right? Either by weekend or by Monday. And so the market will look at that, and people will realize that we are in a worse condition than Italy, especially because here in New York, where they've stated that they need something like 30,000 ventilators within the city, and I believe they only have 4,000, with supposedly 7,000 more on their way. And here in New York, they're even stating that they're working on having it so that 2 patients will share 1 ventilator. And I'm wondering, one, how they're going to do that. 2, how are they going to minimize risk for reinfecting each other, etc. But we'll have to wait and see how that works out. But like I said, if we're going to be pulling back, I would probably look for a pullback to about the 20K mark. And of course, like I said, throughout the next year or so, I would anticipate that the market coming back down, maybe settling more down towards 16K. You still have ample opportunity for buying in this market. I wouldn't want people to think that there's going to be this slingshot in the market is just going to go from 20K and we're going to be right back where we started. The market's going to be right back at 29K. It's important to look back at history. Those who do not pay attention to history are doomed to repeat it. And so we have ample opportunity. Looking back at the old, you can just look at the old sell-offs from 2009. As you can see, it took quite some time for the market to recover and subsequently retest previous areas where the market fell through, right? The market fell through here at 8K. The market subsequently came all the way down to about 6,400 and then came back up and then retested at that 8K. And so that's what you would look for. You, of course, outside of a crisis scenario, we also have to keep in mind that we also have the looming economic factors that have yet to show themselves because of many, literally, what was it? They say like it was 3 billion or 3.5 billion people, right? Literally almost half of the globe is under shelter in place. And so this will have drastic economic effects that we have yet to see reflected within the market. What you're seeing reflected now in the market is more related to the coronavirus, and of course numerous different companies talking about their forced layoffs. Like if this sector doesn't get bailed out, it's going to go under, and it should. If you've run your business to the point where you're completely leveraged, and then through you have no savings, and you've been just, everything is just expansion, then those entities that have not been prepared and are not able to weather the storm should go under. And in a free market, someone else will step in and will fill the gap. That's just a reality of how free markets work. And while yes, during a short period, a lot of these smaller problems in terms of employees, yes, they'll experience periods of time of unemployment, but then there will be other pockets where jobs will open up. Like for example, Amazon hiring, I think it was 100,000 people, and a lot of other delivery places are hiring people. So there's always other niche areas where you can move into, like for example, trucking, like for example, the medical field. This is a time period where people can move into different areas and fill niches where they're being closed in other areas, like for example airlines, like for example restaurant, in a lot of those areas where those jobs are being closed, they'll be opened up in other areas. Like for example, the need to make masks, the need to make PPE, the need for ventilators. If you're an engineer and you're not building cars, well then you'll be building engineers, or maybe this is an opportunity for technology to step in and to do better screening, have access to better screening, making us aware of where there are pockets of infection so people can avoid those areas, etc. And so the market will fill the niches. We just have to allow it. Every time the government gets involved, it hinders the free market. And what we would want is a free market. So I would say, looking back at the charts, I would say there's always opportunities, and the market moves very slowly towards the upside when the market makes a correction, right? When the market has finished its downtrend and now we are correcting and going in the opposite direction, it takes time, as you can see from from March, from about March all the way up until July. You had ample opportunity where if you're just an average person and you're living, you're just putting a little bit from your paycheck, you had ample opportunity from March, April, May, June into July, where you were still catching really good opportunities within the market overall. And then even if you were still buying over the long run, you still would have done really well. Even if you were buying here at 9,500 and then you were watching at 10k, and then the market held 10k, and then it re-rallied, and then it tried to test that 10k mark, but the market said no, we were going to keep on going higher. And so you would have done really well if you would have, of course, just held. So of course, this is what I am advocating. I would say be very careful about adding liquidity into the market at this time. Wait for an appropriate bounce. Like I said, we may see a bounce. I had encouraged putting in a little bit of money where we came to the 24, 22, and subsequently 18k mark. If the market does break below 18k, we will hit 16k without a doubt. If we break 18k, we will hit the 16k mark, and so maybe you'll add a little bit more of your position. If you have an M1 portfolio and you've decided to allocate X amount of dollars throughout the month, spread that out over time. Wait for the market to pull back, add a little bit over your whole portfolio. You might see sectors of your portfolio get hit harder than others. The tendency might be to put more money into those sectors, but keep in mind that those sectors are being hit harder because they're showing more weakness. Not necessarily means that it is a buying opportunity. It means that the market is stating that there could be more weakness in this particular stock or in this particular sector for a reason, and you may not know what that reason is. So it's better to have a balanced portfolio and to inject a little bit of liquidity into your overall portfolio than just picking out one. If you're wrong, you'll be wrong big and you'll lose quite a bit of money. Like for all those people that were busy buying CCL when CCL was in the 30s and people were like, oh, it's a great opportunity, and now CCL is $14. They literally have lost $20, almost 40% or so of the overall value of the stock. Very foolish, very foolish. And of course, who's going to be going on a cruise right now? Who's going to be going on a cruise in 6 months, right? So these are important things to keep in mind when it comes to how you're allocating your money. Can you have risk within your portfolio? Of course you can, but that risk should be based on the reward. What is the risk reward that you're looking for? And of course, the more riskier it is, then you should allocate less of your portfolio so that you're not wiping out large portions of your portfolio. For example, like all those people that were buying Tesla when Tesla was up here at 700, 800, it collapsed all the way down to $350. It subsequently come back up, but Tesla has a long way to come right back down. So I'm sure all those people that were buying this company, when they saw it come all the way down, of course, Tesla was a decent buy when it came down to 350. You can see it. This is where it for a long time, it held. It couldn't break above 350. So obviously the 350 mark on the pullback was what you should have been waiting for all along. And like I said in many of my other videos, patience pays. Warren Buffett said it best. For those who have patience, they will end up reaping the reward in the long run. With that said, thank you very much for watching. Hope you have a great day. Take care. God bless.